So I'm going to do a video from last week, bit of price action on EU, and a good example of liquidity, how we can identify liquidity and use it to our advantage from basically the strategy we trade and what I teach in the Discord, and ultimately understanding what price is doing, why it's doing it, and yeah, so how we can use liquidity, supply and demand zones, what is mitigated, what's still valid, what isn't valid. And I think this is a pretty good example on EU right now. So I'm on the 15-minute time frame, okay, and what we can see, if I just zoom in, we have this inside bar. So you can see it's a pink candle. This is an inside bar. So what that means is it's completely contained within the previous candle. Okay, so if we're looking at the previous candle, if you're more of a beginner, we have a high and we have a low to that candle. The next candle is inside, okay? So it doesn't come outside of that candle. That's why it's an inside bar. So that is showing to me, you know, a range on a lower time frame if we're going to drop down to see that, okay? And we can also see that this also caused break of structure. Okay, so we had a nice break of structure that led to a new lower low. What caused it? This move that started from this candle, which is after the inside bar. Price did come back up into it, but as you know, I'm always looking for the EQ of any area, range, supply demand level to classify something as mitigated or not. Okay, the red line is the EQ. EQ means equilibrium, so it's the halfway point between, well, it's the halfway point from a supply or demand zone. Okay, so we're looking to trade this zone. That's the halfway point. Price come in, but it didn't come in to fully mitigate. So that is when I would class this as still an area. So if we get a reaction from it like we did, we can look to trade based off this. But if we come down and then we revisit back into this area and we go higher, I will still look for entries on lower time frames, just like we saw here. Although we didn't take out the EQ, we did take out this high ever so slightly. And even if we didn't take this high out, we still swept liquidity previously from these highs. So I would still be looking for entries from like we saw here. Okay, so if we get into why price came higher, if I just hide that. Okay, so this was created, this supply range. Okay, we tapped in, we pulled off, we didn't put in a new lower low, we actually had equal lows. Okay, so straight away we've got liquidity resting below this that we can look to target if price comes back up into this area. Also, we have highs that match as well. So, you know, this is a range, right? We have liquidity from the sell side, liquidity from the buy side. Price come up, reacted, and giving people, you know, from supply within here, giving people hope that it's going to drop from here. What does price do? It goes higher into the supply, above liquidity, sweeps it, and then now that price has swept liquidity, we actually can move to the downside. Okay, and we will see this happen all the time. Okay, this is just how the markets always move. So if we go to a 1 minute, now we know we've got a 15-minute area, and I'm gonna just refresh this. Okay, bear with me. Let's take it back. Okay, so right, so this was the trade that I took, ended in 5.4%, and I'm not going to get into this fully, but basically we tapped into that 15-minute area, we reacted, price come back up into that last real area of mitigation. So we're looking at this, price come back into that, and then I'm literally, rather than just trading that, I want to see a bit of confirmation that price is going to come and sell off from here. So we've got a nice push down. We saw a nice little flip or a change of character. We tapped back into that inside bar and then boom. Okay, managed on a structure, so I got taken out there. Lows for I think it was like 11. Okay, yeah, 12. But yeah, you know, good trade. Happy with that. Getting onto this, we can see them equal highs that I showed you on the 15 minute. Okay, price come in and we swept it here. And a few key things to note here. We come in, we tapped in, and then we're just looking for structure. What is structure saying? So we can see this is the move that takes liquidity. We have a high and we have a low. We have a high. Okay, so straight away we come in to mitigate, wick. What does price do straight away once we tap in? We actually push down, we get a change of character from this higher low, and we get a bit of inducement. Now, although you can be looking to take this as an entry, so you'd be looking, you know, we have a high, a low, price pushes down. You could be looking at that. That wouldn't necessarily meet my plan, because although we've taken liquidity from the 15 minute, we haven't really, you know, we're still early on, and it's likely price is going to take the high or push higher and then sweep liquidity, shake people out, and then we can see the move down. And we'll see this happen every single time where we get inducement. We want to get involved, and don't get me wrong, I would have taken this a while back, but you know, it's about being patient and really understanding what price needs to do before it can actually continue. So let's say we took that, okay, we would have got involved maybe on the wick. So let's have a look. If we took that on this candle here, or the wick, it's likely would be taken out. Okay, we'd have been taken out. That's a loss. Price takes the high, but once we took that loss, we don't want to just be disregarding this move, this trade idea, because that's when we're going to be missing out and really be kicking ourselves. If we take a loss here, then we say, oh, that's it now, taking a loss, we're going to leave it. We really want to be understanding what price is doing, and you know, just take it from there basically. So what we can see is price push down, and straight away we can see a flip. So we was putting in these higher highs, higher prices, and now we're putting in lower prices. So if we go through it, we had a high, price come back into this level of, you know, subtle demand. We break it here, so we have an entry there if that's something you'll be looking at. So a lower low, lower high, lower low, lower high, lower low, lower high. So with this move here, it's very clean. We can see momentum, as opposed to we don't really see it previously from this move here. Okay, so that is something that I would be looking at. And what we can see, we have the candle before momentum kicked in that broke structure. Okay, and we can disregard that. Okay, so we have a nice push. The last buy candle before the push down, we have a range. Price then pushed down again. So if you're looking at that as an entry, it's likely going to be induced. I know it's easy saying that in hindsight, but you know, this is why it's happening. We have a high. People are looking at this. What does price do? It pushes up and then it impulsively breaks through it. Okay, impulsively, and it taps into that area there. So to take this trade, we've got all the confluences. We've got higher time frame liquidity clearing, higher time frame area to trade from. Structure was bullish. We've taken liquidity on the lower time frames. We've now flipped structure. We're putting in lower prices. We have a nice push down. That's broken structure. A range before. That's likely going to be inducement. Price comes in and we can set our entry at that area. Stop loss, you know, if you're going 2 pips, that's fine. 1.5 would be enough. Price taps in, and we actually react straight away. Then we actually come back up, take the high, mitigate that EQ, and then we're off and running. And you can see, just managing on structure, if we're going to go through this, if we're in this trade, we'd be in it still at this most recent structure point. We'll see, do we get taken out here? Not yet. Okay, so we didn't. That's another very clean entry. Although I wouldn't be taking that because it hasn't really. It's not inducing no one, and it's quite deep. It's quite deep into the 1 minute sort of move. And if we're looking at the 15 minute, I think we already broke that low. Okay, so I wouldn't be taking that. But you can see that we come in and then we take the low. We can now start managing more aggressively because it would have been a Friday and we are in heavy profit, and especially on large accounts. So you could be looking at that, or I would be looking at this as a clear pullback and managing at that low, or that high, sorry, and we get taken out. We'll see what price does. Okay, so we do actually go lower, so we would have been kept in, but you know, it comes from your own testing and what you're more comfortable doing. So what would that be? 12-13%. And yeah, literally just utilizing liquidity, supply and demand zones, inducement, and yeah, not being. It's very easy to look at trades and think, yeah, that's where price is likely going to react from. But actually pulling the trigger and having the confidence takes skill, takes time, and it's not going to come overnight. It just takes time. That's it. That's the key to it. If you can keep doing it day in, day out, correctly risk managed, then you'll get there. And you know, these trades, all of us can take these trades. Everyone in the community is very able to be taking trades like this, and they happen every day, pretty much. And that's from one pair. So, you know, we just need to be putting in the work, and yeah, just give it persistence, patience, and it's so good when you can see it, understand why price is doing what it is, and ultimately, you know, take a profit every single month and do it for a living, pretty much. And yeah, that's what I've been doing, and I hope all of you are going to be doing it as well. I know a lot of you are already, which is great. But yeah, I thought I'd do that video. I thought you'd find value, and I did get a request to do more videos where we look at liquidity and how we can use it, what it actually means. So I will do more of these. If you want to see them, let me know and I'll make it happen. But yeah, I hope you have a good week, and yeah, let's get in some trades.